So welcome back to another episode of Invest in You, and in this episode we'll be going over some construction stocks. Okay, so one of you all asked me to look at Aveng, and instead of me just looking at one company in that industry, I'm going to be looking at a few. I'll also be saying a little bit of my approach on how you should approach the construction industry at the moment. Okay, so let's get right into it, starting with Aveng. So I'll also be looking at two other construction stocks on the JSE that I would probably say is a good idea to look into and evaluate. Okay, so now remember, when I mention these stocks, I'm not a financial advisor. Read the description in the bottom thing there. Oh, okay, cool. So yeah, this is just for education purposes. This is me telling you to go look at these companies, giving you a little bit more info onto them, and then you need to make your decision whether you want to invest or not. So there's been a ton of focus, especially on Twitter, from some specific people on Aveng, claiming that it's going to skyrocket, it's going to be the next thing, and it's all based on trade volumes. It's all based on what value is being traded or invested into at the moment, usually from insiders, meaning people inside the company. Okay, now, before I get into it, one big thing to understand is, I always say, invest in a company you understand, you like, and you know. Okay, don't just invest in a company because someone inside the company is buying up stock like crazy. Because especially like with Aveng, who has a very, very low stock price of 0.05 cents, it can mean multiple things why an insider is buying up shares. Okay, it can either mean that person is trying to save the company by investing in it, and then i.e. pushing up the stock price, and then also signaling people who just follow like sheep to buy the stock. Okay, so make sure you do your research, your due diligence, and buy into a company that you understand and like. But I'm not saying Aveng is a case like that. It can also be that someone inside is buying shares because they obviously trust and know the company, and they probably know something as big is coming up because they can obviously see like this company is doing some great things. Now, getting into Aveng, they have been, as with any other construction stock, been just pummeled, like destroyed, okay, through COVID and just all the economic downturn. Now, good on Aveng. What they've done is 2019 got a new CEO, but the guy's been in that company for a few years, and they are starting to restructure. They're starting to get rid of their non-core businesses and keeping the ones that make money, okay, to some extent. So let's look into what's left. Aveng has got two main core businesses, which is McConnell Dowell and Mormons. McConnell Dowell brings in 65% of the group's revenue, and it is the construction, engineering, and management part or division of this company. Then you get Mormons. Mormons is based in South Africa, and pretty much what it is for open cut mining industry. So open cut mining will typically benefit from like coal mines or like magnesium mines whenever earth or like a material that they need is in shallow ground, meaning they don't need to probably make tunnels. Then you'll use open pit mining. And Mormons brings in 17% of the company's revenue. Then their non-core businesses is their Aveng Steel, which brings in 10%. Then they have Aveng South Africa Construction, which brings in 3% of the revenue. And then they have Aveng Manufacturing, which brings in 5% of revenue. And that is majority mainly like stuff like steel or steel rods. Yeah, now I have said what's happened in Aveng is there's been talks of why people or insiders are buying. So what's happened is up to 4.1 million rands worth of shares have been bought up in the company from inside people in the past 1 month or 1 to 3 months, and that now has sent off this frenzy of people obviously claiming that you should buy up Aveng. Now, yes, the advantage of Aveng's stock price is low, so it does not have much further it can go, okay, but also it can go to bankruptcy, which you don't want. Now, obviously not saying this company is going bankrupt, because I do not know that, and that would be wrong to say. But with construction companies are not known for having great gross margins, okay? So typically on their projects, they get about 3 to about 10% gross margin on those projects. In Aveng's case, they have a 6.5% gross margin, which is probably not too bad for a construction company. Yeah. They do have a debt to equity ratio of 94.4%. Okay, now one thing, if you refer all the way back to one of my starting videos, 94.4% for construction industry stock is not high, because they typically fund these companies from, or these projects from debt way before, and then once the project is done, they get their money, or they get it in like payment certificates, which is like intermittent, and yeah, so it's just a lot of upfront debt. Okay, now what I do like about Aveng is their headline earnings per share did move from a negative 1.1 cents to a positive 0.6. So that does show that the company is working, and they do have a positive free cash flow. Now, yes, positive free cash flow is most probably because they've sold like majority of their non-core businesses. Okay, so they do have a lot of cash dollar to fix their company and obviously invest into the stuff that works. And Aveng focuses in construction in South Africa, especially. They get a lot of cash dollar from Australia's operations and then also Asia's operations. Now, my general feel about Aveng is it is obviously a stock that's busy getting their act together. Unfortunately, they started doing it just before COVID hit. Okay, so it's probably made things a lot tougher for them. Not probably, it has. Okay, so for a company who's obviously seen that, like, listen, we need to fix our act, we need to fix the company structure, they've not been doing too bad in it. It's just unfortunate about COVID. Okay, and then that probably links in just with my general conclusion I'm going to say at the end as to what I think I'm probably due with all these construction stocks at the moment. Okay, then another construction company stock on the JSE is WBHO. Okay, now WBHO, they have quite a more expensive stock price than Aveng. Aveng is probably considered undervalued, and where WBHO is considered overvalued for what it's going for. And it is interesting to see where their stock price has been going in recent years. Okay, they've got some really cool projects. They're building the Harbour Arc project in Cape Town. And that's just another thing. When you look at companies like this, it's a bit different. Typically, especially in a country, you need to make sure that these companies are probably getting big infrastructure stocks. So that would be anything in like roads, tunneling, bridging, these big like commercial district developments, and just like cool projects. So Aveng, for instance, has that floating apple ball thing that they do. And then WBHO has this Harbour Arc project. Okay, and then yeah, so similar, WBHO have the construction, civil engineering, the roadworks, and they also have the manufacturing, which is long steel. They also operate in South Africa. They also operate in Australia, which is a bit of a worry because that division of the company is burning through their profits. And then they also operate in Asia and UK, and then obviously like they've got the odd project. Now, one thing I do like about WBHO is their management actually has hands-on experience, and that is one of my main things I look for in companies. Hence why I like Tesla, because the CEO actually is a chief like engineer, you know, so he actually knows what he's talking about. Same thing goes for WBHOs. The O's running, steering the ship, has experience in civil engineering. Okay, so they actually understand the projects. Okay, I am very wary of investing into stocks that have someone at their home that have no idea how the technical stuff work. Okay, cool. You can have an MBA, but you also need to know how the things work. Then on the other side, or the flip coin of the insider selling, one insider sold 3.1 million rands worth of shares, which obviously is a red flag. And I do say don't obviously follow these things. It might just be that this person sold shares to obviously start like a new company, or it's COVID times, they need cash dollar, you know, they want to buy a new house or something like that. So don't just always read these insider sellings as like oh no, there goes the company, or there goes the company, you know. So yeah, always take that with a grain of salt. Obviously, if you see 20 different insiders selling their stocks, then it's probably a good red flag, you know. And then there'll probably be some regulation issues later down the line, because how did everyone know to sell, you know? Yes, but then looking at the financials, it doesn't look too great. Okay, so they've got a negative headline earnings per share of 935 cents, so that means negative 9.35, and they've got a decreasing profit margin since 2016, and they've also got a negative operating margin, which obviously is not the greatest. Now, yes, it is the construction industry, so they are not having the greatest time. The nice thing about WBHO though is that it has quite a big chunk of an order book. So an order book is kind of all the projects that are on the books at the moment, and that's ordered. And as I said, these projects are busy and they normally take for a few years, so that's why they mention these things. So WBHO does have a 35 billion rand order book at the moment. That is a bit less than the previous year, but it is still significant. Okay, so WBHO, in my opinion, one thing I like about them is their management structure and the projects they are doing. The one thing I do not like very much is the state of their financials. Now, yes. Okay, then finally is Raubex. Okay, now some people call it Raubex and some people say Raubex because it is spelled with X. So I'm just gonna go with Raubex, okay, and then, you know, just do the thing where you like tune me and then accept it. Okay, Raubex or Raubex, either one. Okay, same idea, but they are more focused into infrastructure, roadworks, and then obviously materials division, but mainly like road. So a lot of their projects are like road based or like bridges or just general infrastructure. And then again, one insider sold 31.3 million rands worth of shares. Now this is where my brain starts turning the other way a bit again and being like, what difficult times are you in that you need 31.3 million rand? So then I'm maybe like, maybe this guy was not too happy anymore and then he got out. But then again, you never know. Okay, unless these people obviously say publicly why they did it. Okay, like for instance, in the case of Purple Group, where the guy came out and he said he's doing it because they obviously want to bring in a new shareholder. And yes, okay, so always do your research. Good thing about Raubex is they've got a 0.8 PEG. And they have a debt to equity ratio of 17.4%, which is extremely low for a construction company, which either means they are very good at obviously doing their projects and getting the cash dollar back, so they get rid of that debt, or they don't take on very big projects, which is not the case. So yeah. But so that is my three main construction companies for the JSE. Now, one thing I want you guys to understand is, unfortunately, South Africa has been decreasing infrastructure investment in the past few years. Every year, the budget gets cut more and more and more, which means construction companies don't get big, like government infrastructure projects. And then obviously our economy is not doing too great, so not a lot of people are building these big things, okay? So yes, unfortunately, after 2010, with the Soccer World Cup, a lot of construction companies boomed and then work just disappeared. Okay, so when you look into construction companies, make sure you do your research and you have a high risk tolerance, okay? Because these companies can usually go either way, okay? Now, my approach, if you want to get into the construction industry, okay, there's two routes you can go. Either invest and buy like the stocks of the companies that they use, okay? Because, you know, like, they generally use the same type of companies, or you invest into things that make their company better. Okay, so what do I mean by that? Now, unfortunately in South Africa, there's not a lot of options you can go, okay? So if you want to invest into the materials part of it, I would say look into companies like Afrimat, okay? Afrimat makes like materials, they rent out equipment and all these things. These construction companies use building materials to build their stuff. Okay, so now obviously if they don't get it from their own internal materials division, they have to get it from somewhere. That means companies like Afrimat benefit from that. And then if the construction company does not do too great, Afrimat does not struggle that much because there's a lot of other stuff that they use and they get from it. And then also Afrimat does the whole manganese mining now and the coal and the export to China. Okay, so you just have a bit more of a risk like aversion, okay, or mitigation through by doing that. Then alternatively, I would look into technology advancing stocks for the construction industry. Now, the reason for this is the South African industry is really not penetrated by technology that much, meaning there's a lot of room for it to change. Okay, so when you go overseas to the US stocks, I would say do some research on stocks like Trimble, okay, Autodesk. Literally everyone in the civil engineering industry knows Autodesk. We use Revit and we use Inventor, we use AutoCAD, all those things that Autodesk makes, okay? It's the software company that just makes all that software, okay? And go do yourself a favor, go do a little research on BIM. I'll probably make a video about it. But Revit, BIM, same thing. That is where construction is going, okay? And they sell subscription-based for the software. So again, all construction companies will probably use this software platforms. So buy the stuff that they use, okay? Because then it's, you know, just a bit safer. And then, yeah, even again, unfortunately, it is a US stock, so it's like Caterpillar. Every single site has heavy equipment, machinery, vehicles on the site, okay? They need a digger loader, they need a roller, okay? They need like a paver. All these things and all these machines are made by Caterpillars, okay? By Caterpillar, cat, okay? So, good idea, look into that company that benefits from every other single construction company, because then inadvertently you're kind of investing into the construction industry without focusing on one, which is a danger. Okay, so my take for the construction industry at the moment is, I would say, me personally, I'm taking a step back. I'm looking at everything like Aveng and like all those, but it's very risky at the moment because of where the economy is, because of the sad past few occasions that's happened in South African company in like the KZN and Durban area. Like there's a lot of risks as to obviously infrastructure investment and development and money going to that route. So construction companies might just find it difficult, obviously, to grow. Okay, so, but they're not saying you shouldn't invest, okay? Always make your decisions, look at the risk, look at the reward, and make your decision. Okay, I'm just here to inform you of what they do, the risks involved, and then you just gotta make your own decision. Okay, cool. I hope I shed some light on it. I think I spoke a lot. Okay, cool. Probably rambled quite a bit. If I did not answer, drop it down in the comments box and I'll try and do it again, fix it, or, you know, just make another video. Cool. Thanks for watching.